Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Churchill Downs Inc. quarterly report. Churchill Downs Incorporated offers a diverse range of businesses and services across three segments: live and historical racing, wagering services and solutions, and gaming. The company's services include live and historical parimutuel racing activities, racing event-related services, admissions, sponsorships, TV rights, food and beverage services, online horse racing wagering through twinspires.com and betamerica.com, streaming video of live horse races, and replays horse racing statistical data through bloodstock research information, services technology services to third parties retail, and online sports betting businesses, parimutuel wagering systems for racetracks, OTBS and other parimutuel wagering businesses, United Tote, Central Determinant System Technology in HRMS, Exacta, casino operations with slot machines, table games, video lottery terminals, and hotel services commission on parimutuel wagering and racing, event-related services. Churchill Downs Inc.'s stock price drop. A mixed bag of factors the past year has seen a significant decline in Churchill Downs Inc.'s CHDN stock price, plummeting by over 31.14%. This downturn can be attributed to a combination of factors, including mixed financial results and broader industry cautiousness. A notable contributor to the decline was the company's first quarter 2025 earnings report, which saw its stock fall by 14.9% despite beating EPS estimates. The softened results were largely due to reduced activity on TwinSpires, the company's online horse betting platform, as well as a pause on certain capital projects. Additionally, industry-wide cautiousness and shifting market sentiment around gaming and entertainment companies have also played a significant role in sustaining pressure on Churchill Downs stock price. Despite reporting record net revenue and adjusted EBITDA for the second quarter of 2025, the company's stock has struggled to recover from its initial decline. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers: live and historical racing, $52.5 million increase, primarily driven by Virginia HRM venues, Kentucky HRM venues, and a temporary facility at Casino Salem. Wagering services and solutions, $6.7 million increase, driven by TwinSpires horse racing, Exacta, and sports betting business. Gaming, $660.4 million increase, primarily driven by the opening of the Rose Gaming Resort and Owensboro Racing and Gaming. Revenue decline drivers: gaming, $4.7 million decrease, primarily due to the cessation of HRM operations in Louisiana. Wagering services and solutions, $9.2 million decline in revenue. Potential drivers that may impact future revenue growth or decline include interest rate changes, general economic trends, and credit risk. Net income and profit margins decline. The financial performance of a company has shown a decline in both net income and profit margins over the past 3 months. Net income decreased from $66.2 million to $39.2 million, while 9-month net income dropped from $356.8 million to $334 million. Profit margins also suffered a significant decrease. Operating income margin fell from 20.1% to 14.3% for the quarter, and from 27.7% to 23.5% for the 9 months. Net income margin declined from 10.6% to 5.7% for the quarter, and from 16.9% to 14.8% for the 9 months. The decline in net income and profit margins suggests that the company is facing challenges in generating revenue and controlling costs, leading to a decrease in profitability. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. In 2025, the net cash provided by operating activities reached $673.8 million, while in 2024 it was $641.1 million. This trend suggests that the company is effectively managing its operations to produce a steady stream of cash, positioning itself for long-term financial stability and growth. The company's debt level has undergone significant changes over the past period. According to various reports, total debt increased from $4,938.7 million to $6,375.7 million, representing a substantial rise of 29%. However, interest expenses have shown mixed results, with some periods experiencing a decrease or no significant change, while others saw an increase. Despite this inconsistency, the overall trend suggests that the company's debt level has increased significantly, whereas interest expenses have remained relatively stable. Management's outlook on company strategy management is cautious about the company's future performance due to various risks and uncertainties. Despite these concerns, they are focused on investing in operations and expect cash flows from operations and borrowings to be sufficient to fund business activities over the next year. The company's growth has been driven by new property openings, with adjusted EBITDA increasing due to strong performance in key segments. Management uses adjusted EBITDA as a key performance measure to evaluate segment performance and develop strategy. They believe it enables management and investors to compare operating performance in a meaningful way. The company has demonstrated a commitment to returning value to its shareholders through two key initiatives. Firstly, it has paid dividends in the years 2024 and 2025, totaling $-30.2 million and $-28.7 million respectively. Secondly, the company has actively engaged in share buybacks, repurchasing a total of 1 million shares at an aggregate cost of $123.8 million. These actions indicate a focus on rewarding shareholders while also maintaining control over its capital structure. Concerns about inventory buildup and supply chain disruption. There is a growing concern regarding inventory buildup within the company's supply chain. The data indicates that inventory levels have increased significantly, from $11.6 million in December 2024 to $12.4 million in September 2025. This trend suggests potential issues with managing inventory effectively, which could lead to further complications down the line. That concludes the financial summary for Churchill DOWNS INC. Feel free to comment below, and I will be happy to answer them when possible.